Today, we are unpacking a really wild day on Wall Street. I mean, one minute, tech stocks are the toast of the town, and then next, they're in a total free fall. But here's the really interesting part. Another huge chunk of the market barely even blinked. So let's dive in and figure out what was going on.
This is the big question, right? How could the darlings of the market, the very tech stocks that have been on this incredible tear, suddenly just crash and burn? And at the same time, why did old-school safe bets like gold and those solid blue-chip stocks seem like they were on a completely different planet? Let's get to the bottom of it.
Okay, so to really understand what happened, we've got to start right at the epicenter of the earthquake, the massive, sudden sell-off in the tech sector.
And listen, this wasn't just a little dip. The NASDAQ dropped by over 2% in one day. Now, to put that into perspective, that is a huge move. It sent some serious shockwaves through the market, and it really showed just how fast sentiment can turn on Wall Street's favorites.
And it wasn't just nervous traders. Some of the biggest names on Wall Street actually started sounding the alarm. They were openly asking if this whole AI-fueled tech rally could even last, pointing to what they called sky-high valuations as a major red flag.
So what caused this perfect storm? Well, it was really a mix of a few things hitting all at once. First, that growing fear that tech stocks were just way too expensive. Second, you had some pretty disappointing earnings news from some really key chip companies. And finally, it was a classic case of profit-taking. Investors just decided all at once, hey, let's cash in on these gains.
But here's the thing about the market. When that much money pulls out of one sector, it doesn't just disappear into thin air. It has to go somewhere. So where did all that cash flow to? Let's follow the money.
This slide right here, it perfectly captures the story of the day, what we call the Great Rotation. Think of it as a huge shift in mindset. Investors basically flipped a switch from risk on, where they're chasing high growth, exciting stocks, to risk off, where they're suddenly searching for safety and stability. And in this case, that meant dumping tech and buying up things like gold and solid blue chip stocks.
And you could see the impact of this rotation almost instantly. Gold, the ultimate safe haven asset, jumped by almost a full % as investors scrambled to find some shelter from the storm brewing in the stock market. So, why the big rush to gold? Well, it's the classic playbook. When fear starts to creep in, gold is where people run. It's seen as a shield against all the volatility. And with some geopolitical jitters hanging in the background, its appeal as a safe place to park your money was stronger than ever. But, it wasn't just gold that was getting all the attention. While the entire tech sector was having a meltdown, the Dow Jones, which is packed with all those big, stable, old economy companies, was just holding its ground, incredibly resilient.
This chart just says it all, doesn't it? On one side, you've got the NASDAQ in a nosedive, and on the other, the Dow barely broke a sweat. It is just a stunning visual of that great rotation in action. So we've seen the two extremes, right? The tech meltdown and the Dow's stability. But what about the market as a whole? To really get the full picture, we've got to look at the S&P 500. The S&P 500 is a mix of both those high-flying tech stocks and the more stable companies, and it ended up, you guessed it, right in the middle. It was getting pulled down hard by the tech sell-off, but at the same time, it was being propped up by those steadier parts of the market. A perfect picture of the tug-of-war that was happening all day.
But here's a fascinating little twist. Even with all the chaos, there was still this undercurrent of optimism. Apparently, a lot of investors were just sitting on the sidelines, itching to hit that buy button. It suggests they were just waiting for prices to get a little cheaper before jumping right back in, which tells you the long-term belief in the market is still there.
So let's wrap this up. What is the big takeaway from all this? What's the one thing you really need to remember from this crazy day on Wall Street?
It all boils down to one key concept: market rotation. And this isn't just random buying and selling. It is a deliberate, large-scale shift in strategy. You're talking about huge groups of investors moving their money from one part of the market to another. And on this day, the move was crystal clear, out of high-growth tech and into the perceived safety of value stocks and gold. So, to sum it all up, here's the story of the day in 3 simple steps. First, you had the trigger, a real fear over those sky-high tech valuations. Second, the reaction. Investors bailed on tech and moved their cash into safer assets. And third, the result. You had a market completely divided, with tech taking a big hit while other sectors basically just shrugged it off. And so we're left with the million-dollar question: was this just a one-day blip? A quick, nervous correction before the tech rally continues? Or is this the start of something bigger, a more fundamental shift in the market? Honestly, only time is going to tell us the answer, but one thing is for sure, it is going to be absolutely fascinating to watch.